Good morning, everybody. Welcome to the Flow Show, Monday, 24th of June. I hope you all had a wonderful weekend and are ready to get going with markets again today. Morning, K-Man. How are you, mate?
Morning, Ryan. Morning, everybody. Yeah, that was a bit of a short weekend, I must say. But we are ready to rock and roll again.
Yep. No, you're right. It was a very short weekend. Lots going on, but yeah, these weekends need to be longer. Tell you what, if one political party said they were putting in 3-day weekends in their manifesto, they'd win by landslide.
Yeah, why don't we put in a petition to create a day between Saturday and Sunday?
Yeah, let's have some suggestions what that would be called. Saturday or something.
Something with day.
You mean going to an 8-day week now, or an 8?
Oh yeah, we'll need to start Sundays.
Yeah, the wash. Yeah, just boot Mondays. I'm always useless on a Monday, but then I suppose if we have that, I'll be useless on a Tuesday from then on. Right. Anyway, enough putting the world to rights. Let's get stuck into things. PBOC, their fixing was up a bit again. They hit the 712s, 712.01. A huge 5-pip move up from the 711.96 we saw, but it's continuing to creep up very slowly. The onshore one hitting close to or hitting at the 2% band not so long ago as well. So that rising on the onshore, which is adding to this further weakness that we're seeing here. There's been lots of stories out about what's going on. A lot of it is well, some of it is shooting in the dark. Others might be a bit more closer to home. Reuters was out with a piece saying there's a lot of cash leaving China. There's been a big equity reversal in flows for the month of May, which stands out when we look at some of the indices over there. If I can find them, there we go. There's some of the China ones. Oh, clickety click. So as you can see, it's been a bit soggy in May and continuing into June. One of the reasons is that there's a big dividend season. Let's call it that, June and July. So quite a few flows are going into Hong Kong to pay for dividends. But this equity exit, shall we say, that's not happening in Hong Kong because, as you can see from the Hong Kong Stock Exchange, that's had a similar performance in May as well. So it could be a dividend thing is why we're seeing this weakness. I think what's key is that at the moment for the yuan, it's slow and steady. It's not rushing anywhere. So we've not heard of China officials getting their banks to intervene in markets. So we're seeing this move. It's still above 728. While it holds there, it keeps this break alive, but it's not looking like it's going to rush much higher. Over at the Bank of Japan, we've had the summary of opinions from the June meeting. It's almost like the pre-minutes thing. And anyway, one member said that the BOJ would be expected to raise rates if underlying inflation rises as projected. And another opinion was that upside risks are emerging for inflation. Also, they're saying the weak yen could lead to an overshoot in inflation, which means appropriate level of policy rate would be pushed up. Another member said policy won't be decided by short-term FX moves. And another said that they should increase interest rates without too much delay, citing those inflationary pressures. So a bit of a hawkish shift in all the comments from the June meeting. That's the most recent meeting. We know we've had chatter from the head man himself. Seems like July could be on the table for a hike, or if at least some changes to bond buying or further enhancement and what they're going to do with bond buying. That's if stories are to be believed. Over on the FX front, we've had Canada out saying we'll take appropriate steps if there is an excessive FX move, and they're ready to intervene 24 hours a day if needed. One of the reasons why they're probably squawking because we're up towards 160 again We got up to a high of 92 today, so run away there again. Suzuki saying desirable for currencies to move in a stable manner, reflecting fundamentals. Excessive FX changes are undesirable. I want to respond appropriately as needed. Over in the Japanese data, oh look at that, I haven't even got my calendar up yet. Where are we? Japanese data, is it on here? No, it's not. We had nationwide department store sales out from Japan, showing a healthy 14.4% from a prior 8.9%. Let's see if it's on this one. Nope, it's not. Tokyo sales up 17.3% versus 10.8% previously. Those are May numbers. So again, coming into the new part of the fiscal year, some good numbers there from the retail side of things. And the last thing on all things Japan before I bring Kay in. It seems that Japanese retail investors are looking to capture some possible intervention. The bullish positions on the yen against the dollar have been building since mid-May via the futures that retail traders over there. And Japanese accounts are nearly 30% of retail currency trading. So that's how quite sizable they are over there. But they all seem to be positioning for a bit of intervention to come, which if they don't get it and we run too high, that could get the market moving a bit higher if those guys get stopped out and start chasing the market higher. Kate, 160, are we getting there?
Well, I mean, we are a whisker away. This is when the retail community starts to position. I don't know. It's since mid-May. I mean, so they must have been starting to sell dollar yen around 150. What? 2, 3, 4. It's hopium, I guess. It's a big level. We know that. It's one that we keep a close eye on. It's one that triggered intervention, albeit because of a bit of a blow off top right when it happened then. There's still a risk, but again, today JGB yield is creeping up a little bit. The 10s are nearly at 1%, but the market is really not. I mean, it's just we keep on saying the same things. For as long as the rest of the yields in major lands don't really come down, barring Swiss now, of course they cut rates last week, but for as long as they don't come really down and those interest rate differentials are not getting shallower, it's still a tough trade. Of course, I mean, interest rate differentials are very quickly washed out when there are interventions, obviously. But if we don't get them, it's a fight against a fight against the differential still. Are we going to see interventions? That's probably the more direct questions. It is possible. It is possible that they said like, okay, 160 is too much right now. We're looking around. The rest of the dollars are not really booking the same advance as the dollar does versus the Japanese yen. So the crosses are still very high. If you look at euro yen back above 171, sterling yen quite comfortably above 200 now, and all the rest are beating records as well. Look at the Aussie yen; we're above 106. It's all happening, and it's the yen crosses are still very, very big. So it will take interventions to really curb this yen weakness. Still, in my opinion, could they happen? Yeah, they can. I mean, if they decide that it's all too much, of course they can intervene, and that wouldn't be surprising. If they don't, then I'm afraid that barring perhaps end of month, end of quarter flows for them, it's probably going to have a look above 160 again.
Yeah, and yeah, it should be reminded that it is end of month, end of quarter
Yeah.
this year. So well, end of half year as well. Of course, time flies. So this week can be a bit of a funny one because it's end of half year. Sometimes you get a lot of funds and whatnot,
Hmm.
financials, creating year end reports, closing off the books, booking some profits to report for their half year stuff, and then so this a bit like the end of the year and end of financial years. This end of month can be a bit of a funky one. So keep an eye on that as usual. Keep an eye on the fixes, the main times, and on the hours. If you see some funky moves happening on the hour, it's likely fixed moves as well, and
Yeah.
will likely be happening all week.
Yeah, and this week we've seen prior fixings in months which were even not end of quarters and stuff, which were where we saw activity in the European mornings as well. The European asset managers are rebalancing some of their books, are um, doing the FX leg of what their investments have told them, especially for those who are FX neutral. So this could be a pretty sizable week in a lot of instruments. And on top of that, we have seen underperformance of the European assets. So I'm going to stick my neck out and say we may see a bit of shortage of euros this week, and especially if you look at the European mornings, it could drag the euro a bit higher, perhaps. I'm always using the necessary pinches of salt or kilos of salt, but I'd say there's a fair chance we see a bit of demand in euros for the end of this month.
Yeah, and just a quick question on, because we know the lines from Japanese officials on intervention are, if they see speculative moves in markets, when they talk about that, who are they talking about? Because obviously, if Japanese retail traders are a big speculative bunch at 30%, if they're the right side of the trade for
Yeah.
the Ministry of Finance, i.e., they're not selling yen.
Mm.
Who are the speculators they're pointing to? Just everyone else?
Yeah, hedge funds, model funds, probably CTAs with some, perhaps even some passive, but I wouldn't say in effect that passive investment comes really to the fore. But I would say hedge funds and model funds and things. They know the flows, right? They know everything from their mega banks. They will know what those people see. They will know what real money has to do as well.
But would they
And
pick
they can make the difference.
would they pick out between international funds and flows, or would they concentrate mainly on what's happening domestically? So domestic
No,
funds and
internationally, I reckon. I mean, the domestic, in a way, the domestic, then you should be looking at the GPIF's insurers and stuff, and they are obliged to put their money at work, and they have certain investment patterns that they do, even external. I don't think that will come, or at least to my knowledge, that is not influencing the pure speculative side of things.
yeah,
I'd say really hedge funds and model funds, CTAs, and perhaps when Mrs. Watanabe and sons and nephews are too heavily exposed, perhaps that could come to a certain degree into the consideration. But I wouldn't say so, because let's just not forget that since Abe and Kuroda were there, that's exactly what they told the Japanese, whether it be private or more national investors. They told them to invest elsewhere. So I don't think that comes into consideration if they say like pure speculative. It may be appearing in some of the banks or so accounts, but that is not going to be their main target.
yeah. Thanks, mate. Right, on to Europe. And ECB Schnabel saying the first indications of easing wage growth are being seen. They've been supported by declining inflation expectations. She says what firms are starting to absorb higher wage costs in their profit margins, i.e. not passing them on to output prices and prices charged. Wages is a big factor of the ECB. ECB's Lanes has his 3,000-page stories on wages every time he speaks. But if they see easing wages, and they haven't seen them yet in some of the quarterly numbers, then that could be a reason why the ECB moved to cut rates again. Some data that is on the calendar this morning. We had the IFO business conditions, business climate, coming in softer than expected, 88.6, and also softer than last month. So again, those green shoots being well and truly trodden on. Current conditions as well, missing expectations by a pip, but remain unchanged versus last month. Expectations dropping back below both expected and the prior month. So no increase yet in Germany for some of those green shoots, as we mentioned. Just looking back quickly to last week, existing home sales were out in the US. We've seen a bit of weakness in some of the other numbers, but this one came in okay, a little lower than last month, but it beat expectations. What's the standout for this one is that median home prices for existing homes hit a all-time record $419.3 thousand, which is up 5.7% from the month last year. So very strong numbers there, at least on the price front, showing. And again, now we're starting to see, and we were discussing this in the chat room, maybe a bit of divergence going on. And these are the little indicators that are constantly watchful. So we saw starts and permits. They came in lower. Starts for the third month on the trot, permits for the second month on the trot. Okay, so that potentially shows that there may be some stresses in the financing side. People buy land, people need workers. If you want to go and build an office block, you don't just have the cash, you go and buy the money. If money's becoming tight, if conditions are becoming tighter, then it's obviously a bit of a different thing to do when you're trying to build houses. But existing sales looking good show that people are still trading up, potentially trading up on housing. So there's a difference between the sectors, the building sector and the real estate sector, general sales and stuff. So there may be some more of these flags that we've been speaking about today popping up. And housing is one of the earliest indicators of signs of contraction or expansion in an economy. And I'm just getting a little bit touchy, shall we say. The old spider sense is tingling that we may be starting to see some of this weakness that a lot of us have been waiting for coming into this year. Again, a couple of months doesn't make a trend just yet, but it looks like we may be on our way. The question will be, is it going to be soft landing or is it going to be a nosedive? At the moment, it's in soft landing, but if it picks up, I may be interested in maybe getting short some dollars. Over in Canada, retail sales came in pretty okay versus quite a crappy month the month before. And K-Man, I hope you're sitting down, mate, because I've got a bit of a shock revelation because I checked back on this. Okay, so make sure you haven't got anything hard around you or sharp. Okay, those retail sales for April, that's what StatsCan in their March numbers had as their flash number, 0.7%.
Oh my God.
They got it right.
Yeah, they keep just one person there who kicked all the rest out. Wow. I mean, no, that is a revelation, yeah? I mean, let's mark this day in our calendar with a big red marker and saying, like, StatsCan got one right.
Yeah, well, they say even a blind squirrel will find a nut now and again. So anyway, those sales were pretty good on Friday, and the flash number, and we'll keep an eye on this now, the flash number for next month is that they come in minus 0.6%. So let's see if they get a record going. Yeah, they could probably do with getting a plaque for that score there, but we shall see what happens next month. We've got the S&P global PMIs coming in as well for the US. and an improvement there on the PMI 51.7. So all tickety boo. Services up as well. Everything looking fine and dandy over there. So again, more soft landing numbers for the US. We'll see if that translates into the bigger numbers, the ISMs, when we get those in a week or so's time. Right, now let's get into politics and a lot of news out of France, because according to a survey for the FT, no less, it seems that a lot of the population is actually trusting Le Pen's RM party the most on economic situation, on economic plans. This was a survey carried out 19th to 20th of June. Said that 25% of respondents have the most confidence in the RM party to take the correct decisions on economic issues. That's compared with 22% for this left-wing alliance and just 20% for Macron. So this gamble he's taken is really looking like blown up in his face. 23% also said they trusted the RM party to reduce the public deficit and debt. And Macron's party, which has big spending plans and tax plans as well, were level pegged with the left-wing party at 17%. Another poll had Le Pen's party at 35.5 to Macron's 21, and this left-wing alliance at 29%. There's been another story out from the man who could become finance minister in Le Pen's party, vowing fiscal restraint and a pro-business stance. And apparently, if they get in, they'll look to not go down the old road they have done, and they will stick to the European Union's fiscal rules. So that is more sounding like more and more, Kay, like they are perhaps going to water down, or this is a case of talk nicely to get in the hot seat and then change.
Yeah, I mean, that's still my view, although it may work, because it may work because there seems to be enough people in France who really are fed up with the situation. It's historically France is a country that can veer from one side to the other relatively easily, and perhaps one day it's going to happen, And I also think there is. Even though the leftist coalition tries to make some things not as complicated or as messy as it is, I think there's a bit of distrust as well of from the French voter to go in ship with the left side too much. So yeah, I mean this looks like we are heading towards. Towards finally perhaps a far-right government over there. We have seen it in other countries, Holland, Netherlands, and Austria are there too, and in Belgium, in the Flemish side of things, it's the biggest party as well.
Yeah, and Italy, of course.
And Italy. Yeah.
So yeah, I mean, as far as the euro is concerned, is it not trading this risk at the moment? But we'll see that pick up towards the end of the week. Obviously, the first round is the 30th, so we'll get the results a day or two, or the next working day after that. So, are we over the election risk, or
no.
Party talking nicely enough that the market's going okay? We might get this shift, but if they're going to keep the status quo financially, we're okay with that.
Well, we have to note, we talked about it just at the start of the show, yeah, that we are in the last week of the month, of the quarter as well. I think the picture for the euro, if you talk about the euro, the picture for the euro may be a bit messy. In the meantime, we are away from the widest differentials that we had, or the widest spreads that we had in Euroland, and you just take the French versus German one. We ran it up to over 80 BPs, and now we are like in the low 70 BPs. That is still higher than where we were before, a lot higher. But it's not as stressful anymore as it was. So I think this week we may trade different stuff in the markets unless you get some sort of announcement or so. But I don't see what kind of different announcement the one and the other side may do, but may come up with. But so we might be trading something different, and then the thing kicks in again starting next week, and then into the 7th, where the second round of the French elections will take place.
Yeah. And it should be known, I know it's early, but it should be known the elections, the first round are on Sunday, this Sunday coming. So there's potential gap risk for markets opening that Monday, depending on how the first round results come out. So if what happens if those first round results come out, and because it narrows it down to 2, doesn't it? I think. What happens if Macron's not in the running, if he doesn't even get through the first round?
That would be a shocker, right? No, I think hang on a minute. I need to get back to it, because I saw somewhere that to go to the second round you need a certain percentage of votes. So could it be that we have a second round, the 3 of them?
Yeah.
I need to check back on it to be completely sure. So far, I mean, it's always been the case that those further left parties never had such a coalition as they did right now. So it could be, I don't know what the second round exactly. I need to check it out, because I think there's a certain percentage above which they could still be the 3 of them. So but I need to check it out. I need to check.
Well, you've got a week to do it, mate. Don't worry. There's no rush. But yeah, it's definitely going to be a risk choke point, shall we say, next weekend. So just bear that in mind in the meantime, and we'll find out the details for that. Right, that's it as far as I've got on the news headlines. Unless anything else you've got, Kay?
Nothing in particular. Just to come back on China for a second, they also decided to create a fund to rescue financial companies. I think together with everything that's going on, and also we have seen that they it's a political show, but they've also said that some separatists, Taiwanese separatists, could actually face death penalties in China, but it doesn't seem like that'd be a thing that really they will make hard on it. But no, it's still not it's still not a great picture over there. If you if all the fund injections haven't worked, and you need to create a special fund to go and rescue your financial institutions, I don't think it's a great picture still for China, right? And I've also seen that the EU, sorry, is trying to put a cooperation in place with Japan and South Korea. So that is defense partnerships. That is also another sign that the stress in that area of the world is not gone yet. So yeah, I still think taken as a whole, the Chinese picture, for the time being at least, doesn't look like one where investors will be really pushed to reinvest into China right here and now, right?
Yeah. Well, I think we have heard previously about this rescue fund because it's mainly tilted towards, or going to be tilted towards, the property sector. I don't think this is the first time we held that news. Obviously, we had early in the year, we had them talking about the rescue packages for the stock market and for buying shares through the Hong Kong link and so on and so forth. So yeah, still chucking easing measures. Let's call it that, because that's what they're doing, easing measures at this stuff. But yeah, definitely not out the woods yet. Right. Okay, that's that done. Let's have a look quickly at what's coming up this week. Bit of a so-so week. We've got nothing out today at the moment. Oh, we've got that industrial trends. That's just dropping out now. Let's have a look at that. I'll put it on the calendar while we're here. That's coming in a little bit less crappy than it was last month. There we go. Industrial trends. This is all the manufacturing production sector coming in at -18 from a -33 and better than expected. Selling prices were higher at 20 versus 15 expected. So a bit of inflationary pressure in that. There you go. Some live data as it comes. Tomorrow is quite American session heavy. Canada CPI could be a decent one for the Bank of Canada, obviously, ahead of their next meeting to see what they're going to do with rates. More housing data, and then consumer confidence. That's the conference board one. Not the Michigan one, so that's the bigger one, shall we say. We'll look at the inflation expectations in there as well as the headline numbers. New home sales, again, more housing, so also keep an eye on prices on that. Some retail sales out of Japan. And then we've got some durable goods in the US. GDP numbers coming in as well, which will be the final GDP numbers for Q1, seeing as we're about to close off Q2. So we're not really fussed about those. They're really in the rear view mirror. And then a few more bits and pieces from the housing front on Thursday. And then on Friday, we get some retail sales numbers, again, more final GDP numbers. And then we start kicking into the CPI reports, some of the flash numbers for the new month coming in there. And it's PCE Friday for the US. So that one will be closely monitored in a follow-up from the CPI data. And no doubt we're going to get all the Fed expectations running around over that as well. So that's our week ahead. Anything in there you've got your eye on in particular, Kate?
Messy day on Friday, potentially, yeah?
Yeah.
Potentially messy day on Friday. Yeah, the final GDP. I don't know whether the market is still going to even look at it. No, I think it's going. We are going towards a bit of a crescendo on towards the second part of the week. Oh, by the way, we also can't forget that we have a pretty decent U.S. Treasury issuance schedule out this week, so that may see some interest as well, or moves around when the bonds will be issued, when we get the results, especially this end of month week, where the people may be I don't know, reluctant, or on the contrary need their money to be pushed into those things. So we may see a bit of funky results there, especially the belly, and then towards the second part of the week, I think we have the 10-year inflation tips. No, we have no. Okay, no, it's just the short end and the belly this time. So that's but it's a pretty decent schedule on especially 2-5 years. It's going to be monitored.
Yeah, very much so. And you can catch all that information in our chat room, in our dedicated newsroom. For those that don't know, news and research, where we get to put all these types of stories and bits and bobs in, just to keep you updated on what's going on in markets, so on and so forth. So if you're not in our chat room, think about joining us. Go to the ForexAnalytix.com website. You can join us. £1 for 10 days as a trial, and then if you like what you see, come and get 20% off using my Forex Flow discount code FFL20. So you can check that out there. Ali, what are you up to today, me old mucker? Messing around in cable still. Long cable 126.38. That's a pretty good feel, right down near the lows there. Looking for 92 with a stop at 22. So got a fairly decent risk reward on that one. Scan your way. There's not a lot happening at the moment. So watch your data points, I think. But you're only 25, 26 pips off your profit target. You've already taken some off. You know, why not give it a go? Take a bit more off, leave a little bit on, see if you can get a move above 127, which has happened before. But I'll be watching 127 carefully because we are making lower lows. We need to see whether we're going to make a lower high now and into this zone, or 127 is going to be the place where it's likely to happen if we are going to see that. Other than that, the dollar not doing awful much, cable not doing awful much, euro sterling still mooching around in between this zone and this zone. So very tight range, 84.20, 84.80, and in the prospective big figures either side of that. What else you in? You got some shorts in euro dollar as well. Yeah, that's back above 107 today. Again, another one playing pretty tightly, just moving above this sort of short-term noise area. 107.20, 107.60 is probably the larger resistance area above. Holding above 107 is going to be positive, and then we got some short-term support down 106.70. Bit of a level, so you know your ranges for this one at the moment. What else you got? Bit of gold on as well. Oh blimey, yeah, really going for it at the moment, Ali. Let's have a look at gold. So I had another move up to
keep an eye on the yen. Keep an eye on the yen. Yen is 30 pips lower.
Oh yeah, 159.36. Let's have a butchers at that. What's going on over there? What are we doing?
Seems to be accelerating a little bit here. Yep.
Bit of nerves, or are we going to get?
I don't know. I don't know, but this is accelerating.
Oh, there we go. 158, 80s. Not seeing anything at the moment coming up.
They could be
just these little wobbles now and again, don't we?
Yeah, they could be just checking rates as well. You know, could be just that they are checking the rates somewhere. That should come on the screens pretty soon. But if they do,
it's also the top of the hour. Well, we're 7 minutes through the top of the hour. All right, keep an eye on that 1K.
Yeah,
back up 159.20s already.
Yep.
Right.
Okay. Yeah. Go on.
Thank you. Let's get back to gold quickly. Yeah, had a move up a bit of this area around the 2360s. Couldn't get over it. Bit of a trend line that's a bit of an on-off trend line. Quite a long-term one that I've got on my chart. Oh, I have to go back to a weekly. Look at that. That's how long-term it is. Coming off of these big tops, and we're just it's all gone wonky. Why is it all gone wonky? Oh, it's gone. Oh, don't know why that was going across there, but it was. Anyway, forget the trend line then. So yeah, 2360s, been a bit of an area. Had a little poke above that, Ali. What is it you're doing? I've lost my screen now. I'm keeping half an eye on this yen stuff.
If you want, I can have a look at gold because I'm in it, Brian. But
yeah, okay, mate. We can have a look at that. But yeah, you can see my levels there on that one. Right, what else is going on? Dollar MEX. That's one I'm still trading. A few of us still trading it. If I find it, there we go. This one could be a bit on walking a tightrope. We've had this rejection. We can call it probably a rejection of this 1850. We're back below, holding back below, not able to move back above. We've got this level 1800. We've had these spikes through it, but they haven't really held. So this 18 level has been a bit more significant than what these spikes show. I think if we're back below there, we may be going in the box, back in the box. I don't know if this is the carry traders coming back in after a few of these last minute carry traders got shaken out in these moves, or whether the market is a bit more happier with the political situation over there. Is not seeing any big wholesale investor negative headlines coming from those guys, so maybe we're heading back here. But the ballpark for me is 18, the big figure, and 1850, and see what we want to do for that one. Dollar rand is another one we're looking at. Oh, back at 1840. I might be looking to take a bit more off here. This is and I'm going to ask this question to you guys out there, because I'm sure you have it as well. When we were trading back below 18, I was getting all a bit negative about it. Oh, I might close up some of the position if we get back above 18. And you feel a bit negative with a position when it's offside, and then you get back above your levels, and you're like, oh, do I cut it or do I let it see if it can run up a bit? And it's one of those things where you change your mind depending on what the picture looks like at any one time. I'm gonna probably take a little bit more off up here. I might do that while Kay's talking. But yeah, let me know. Do you guys get that? You know, when you're offside in a position, you think, oh, if I get a bit back, I'll take it. I'll reduce it, and then you get back above your levels, and you think, no, I'll hold it instead and see if I can push for more. It's something that's happened with me on this one. So if you have that as well, let us know in the comments. Kate, right, I'm going to pat it over to you, mate.
Yeah, okay. I'm really not going to show too many today. It's Monday. We start on a slow note. So this was the one that I think also has helped the euro to come back a little bit. We are still well above, yeah, where Macron decided to call those snap elections. But it's cooling down a little bit, and I reckon over the course of the week, this may, unless it puts in a surprise sharp move higher again, that may have a little less impact, I would say, on the euro right now. We are rather going to start to trade month end, quarter end, and half year end. On gold, okay, I think there's an interesting a double support around the low 23s for a starter, and then we have to look back at what's happening in the 22. 85, 23 the figure, even stretch it to 2280 zone if we would see more downside. On Friday I tried to see if we could actually get through that 50% here. Here is the 50% right here of the correction that we saw from the highs in May down to those 2280s back in the early June. The 50% is at 2368, and we stop bang on there. Okay, so that's really your top end to watch now, 6468. If that would go through, then I think we can continue to push higher. Right now we are back into a traffic zone. I still haven't given up. I still think that there is a possibility that we are going to at least push back up to there before the week or the month is over. Let's see what the US yields and stuff are doing. But also if we look at what's happening in China, the Chinese yuan maybe letting them go a little bit. I do think that, and it's not your 5-minute or 10-minute or even hours trade or one-day trade, but it could be that it pushes a few more of the Chinese accounts back into gold. We will have to see that. So I'm really in the more medium term. I'm looking for this zone here to hold and perhaps seeing a push back up. If we really start to break below 75, 85, then it's likely going to go lower. Technically, I've seen some calls for it to break down a bit more, but to me, I want to see the fundamentals aligned with the text before calling this reversal on gold. All right, so this is what I'm looking at in gold. Silver back into that channel. We did try to get above that flag or whatever people may call it. Bit of a fakie. We are back into the mid 29s. Not a lot to do here. I'm still interested to see if we could get back into the 28 somewhere to add to my long-term longs. And for the rest, it's going to be very dependent on what central banks may want to do, on what the month end may give. we are back into a little bit of a wedge here. Well, bouncing off again. If it's on the back of checking rates, this can go up and down a couple of times. Usually, what happens if this was a rate check by the Bank of Japan, usually what happens is that we trade lower and then it gradually comes back to the levels where we were, but it's going to keep the market on its toes now and perhaps not see too much of an advance beyond those levels. Obviously, and that's a longer term here as well, just in the mid 160s, this is going to be a very big zone to if it would break, okay. But Ali. I don't know why we don't get this news a few years before we get new BOJ rate check. No, I mean, we don't have the news. It is just a fact that they when they may be asked by the Ministry of Finance, oh, go and check if we are about to break 160. Then they call up the Japanese banks and they go like, where is dollar yen? And the natural thing to do if you get the Bank of Japan line ringing, especially close to 160, is those guys are selling dollar yen, and then if there's no trade, then they gradually buy the dollar yen back. But it does keep the market on its toes, right? So I'm not saying that they did anything here at all, but out of experience, I've been trading those markets. I've been trading the yen for, I don't know, actively in markets for nearly 40 years now, and but I've been a market maker in yen for nearly 20 years. So I know the kind of reaction the market has when the Bank of Japan is calling up, and this seems to me like being one of those typical ones. Alrighty, I think the real level, barring interventions, okay, interventions they throw everything out of the window. But I think the real level, the real zone right now is going to be 157, 157 and a half-ish on the dollar yen. We saw the 152s first, then your 152s became rather just below 155. I think the roll here now could be taken over by 157-ish. If that starts to break, then we may see a deeper move down. But again, this week we are going to watch what the end of month and end of quarter stuff is going to bring. If not too much is happening, I would suggest, or I would say that models may be calling again for some dollar selling into the end of the week, but we will have to see what happens on beforehand, of course. And with that, Ryan, back over to you, mate.
Thank you very much, mate. She'll call that a session for today, I think. Yeah, keep your eye on these yen pairs now. We might be just getting into that area where anyone who's long is going to get a little bit touchy, especially with these increased comments coming out for authorities and that. So, yeah, and with the end of month stuff as well. As we said, shenanigans could be happening. Have a great day. Have a great week, everybody. Thanks for coming. Thanks, Kay. And we'll catch you all up tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.